This is King World News. I'm Eric King, and you're about to hear an interview with CEO Peter Barnes of Silver Wheaton. Remember to go to our homepage at www.kingworldnews.com for more interviews, where this week we will also have Bill Fleckenstein of Fleckenstein Capital, as well as Gerald Salente of the Trends Research Institute, and where next week we will have Dr. Mark Faber, author of the Gloom Boom Doom Report, and Bob Quartermain, Chairman and CEO of Silver Standard Resources. Joining us now is Peter Barnes, President and Chief Executive Officer of Silver Wheaton. From Silver Wheaton's July 30th press release, I am very pleased with our performance during the second quarter, said Peter Barnes, President and Chief Executive Officer of Silver Wheaton. Despite continued challenges in the global economy, Silver Wheaton is proud to have achieved record attributable production during the quarter, and we remain on target to meet our 2009 sales guidance of 17 to 19 million silver equivalent ounces for the year. In May, we closed the Silverstone acquisition, which was accretive on all key metrics, significantly increasing attributable silver reserves and resources and boosting annual production levels by approximately 4 million silver equivalent ounces. Already we are seeing further growth opportunities from these mines, particularly the Minto mine, where they continue to have spectacular exploration success, end quote. You were able to make that acquisition on very favorable terms for existing Silver Wheaton shareholders. Would you mind talking about the importance of the Silverstone acquisition and how that solidified Silver Wheaton as the largest silver streaming company in the world?
Yeah, we created Silver Wheaton just under 5 years ago with a new business model in the mining industry, one in which we removed many of the risks faced by traditional mining companies and also maximized the upside for shareholders, which is really the best of both worlds. Silverstone actually copied our business model 2 or 3 years ago and had made several smaller acquisitions that we weren't particularly interested in at the time due to their size. However, in total, they were getting to be a decent size, and they had some good assets and strong cash flows and some good growth potential. Unfortunately for them, one of their core assets had some problems in the last 6 months of last year when the economic crisis came. And so we took the opportunity to buy them at a very attractive price from our point of view. We paid about $130 million to buy Silverstone, and at today's silver prices, it provides us cash flows of about $40 million a year, which is a very strong return.
Also from your press release, last but certainly not least, construction at the Peñasquito mine is going very well, with completion of the first sulfide process line on schedule and commissioning underway. Silver deliveries from Peñasquito to Silver Wheaton are targeted by year-end, crystallizing significant sales growth over the next several years. From your latest investor presentation also, 25% interest in Peñasquito would rank as one of the top 20 silver deposits in the world. Talk to me about Peñasquito. How pleased have you been with how that project has progressed?
Listen, we did a deal to acquire the silver from Peñasquito just over 2 years ago. Peñasquito is the largest silver deposit in the world. It was a transformational deal for us. We paid $485 million up front to get a quarter of all the silver that ever comes out of the mine. The great thing from our point of view now is that it's only just about to be reflected in our operating results, with silver flows expected to commence from the mill literally in the next few weeks or months. Just the silver portion of Peñasquito is the largest silver deposit in the world, as I mentioned. And even though we're only getting quarter, as you said, quarter is still one of the top 20 silver deposits in the world. So, I mean, it's one of the massive silver deposits out there and very, very accretive for us as a result. On average, we're going to get about 7 million ounces of silver a year from Peñasquito for over 20 years. Compare that with our estimated production this year of 17 to 19 million ounces from a collection of mines, and you can see that it absolutely transforms our company over the next few months and years. I don't believe that the value of Peñasquito is reflected in our stock price at the moment. We get so many questions about, is it going to come in on time? Could it be delayed for 3 months? I mean, a mine that's going to go for 20, 25, 30 years, it doesn't really matter if it's delayed 3 months. I mean, it still doesn't change the huge value to the company. And I actually think it could well come in on time, if hopefully a bit early. So I think it's a tremendous buying time right now to be for people really focused on long-term investments versus short-term.
Another portion of that release, with almost $50 million of cash on hand at the end of the quarter and access to an undrawn $400 million low-cost credit facility, we remain very well positioned to continue delivering on our strategy of accretive growth. I have two questions here. Let me ask first, you certainly have a large credit facility already in place. Are there any plans to increase the size of that line based on your strong cash flow?
We don't have any plans to increase the size of our credit facility right now. In order to do further acquisitions, we've actually got three things. We've got that $400 million credit facility. We've also got cash on hand, which is building up every day. We have about $60 million on hand right now. And on top of that, we have cash flows from our current silver sales of about $150 million a year at today's silver prices. So we think that the combination of the three of those things can handle most acquisitions.
My second question is about this continuing delivery of these accretive acquisitions going forward. You're going to continue to do these acquisitions, and you have, and I was talking to Sean Boyd about this from Agnico Eagle, but he talked about the importance of geographically friendly regions. And in one of your latest investor presentations, you talked about high quality, low cost, and long life assets in politically stable regions. You have 54% of your attributable reserves and resources in Mexico already. And since many smaller producers' stock prices are so beaten up in terms of go forward price to earnings ratios, will you continue to use your shares as currency to buy these undervalued assets since you have a much stronger valuation because this seems a prudent strategy? And will you continue to focus on Mexico?
Well, I guess that's two or three questions in one. But in terms of political risk, yes, absolutely, we focus on that. That's one of the key things we look at. In fact, we've walked away from some very attractive deals because of where they are. I just don't think the market prices political risk properly. I think it doesn't differentiate enough between low political risk and high political risk until, of course, it's too late and there's a problem. So all the deals we've done so far have been low political risk countries, and that's certainly a focus going forward. Mexico is one of the best countries in the world to mine in. It's not a focus of ours other than there's two countries in the world that produce most of the silver. Mexico is one, Peru is the other. So in terms of future deals, you can expect to see us doing more deals in both of those countries.
Let's talk about value and creating shareholder value. You've positioned Silver Wheaton well in terms of operating costs, and you have no ongoing capital expenditures or exploration costs, yet you benefit from production and exploration growth. Would you mind elaborating on how this benefits investors who are looking for leverage in relation to the price of silver? Meaning, why should they buy Silver Wheaton shares, say, versus another company?
Yeah, well, as I mentioned earlier, less than 5 years ago, I believe we created the best business model in the mining industry, one which eliminates many of the risks that traditional mining companies face and yet gives very strong upside to silver prices. And that was the key theme when we invented the company, and I think we've shown that we've been very successful at it. We're one of the largest silver companies in the world now, after just 5 years, and we're actually one of the largest royalty-type companies in the world in any metal. So I think, clearly the model has got a lot of traction. One of the interesting things about silver is that over 70% of silver production doesn't come from silver mines. It comes from base metal and gold mines as a byproduct. Because we don't buy the entire mine, we just buy the silver portion, we have a much larger set of potential opportunities to grow our company compared to traditional silver companies, because they want primarily silver mines. And I think it's for this reason that we've been able to get our fingers on 7 of the top 35 silver deposits in the world already in just 5 years. Most silver companies don't even have one. And that really positions us extremely well to continue growing the company going forward. I think the other key aspects of our model, as I mentioned before, the downside protection. We don't spend CapEx, we don't spend exploration, yet our mining partners do, and we get the benefits of that at no cost. Also, I think one of the key aspects of our model that most investors like is that our production costs on an ongoing basis are fixed, which gives us a huge advantage during an inflationary environment. The average cost increase over the last 5 years in the mining industry was something like 20-25% a year, whereas our costs were going up 1% a year. So that's a huge strategic advantage. And then finally, most mining companies have currency risk. We don't. We do everything in US dollars. And also one of the key aspects I think a lot of investors like is that our company cannot lose cash flow. We buy our silver at the lower of $3.90 an ounce and the silver price. So if the silver price went to $2 one day, we buy at $2. We can't lose cash flow. Whereas at $5, every other silver company will